Hey everyone, and thanks for checking out the Real Hickory Podcast today. On this episode, we are talking to Clint Davis with Ownership Mortgage LLC. Thought it'd be a good idea to talk to Clint about the state of the mortgage industry and hopefully give some insight on what to expect in the coming months. Now, full disclosure, our firm does have an ownership interest in Ownership Mortgage LLC, NMLS 1907331. And because of this relationship, this referral may provide our firm with a financial or other benefit. You're free to shop around to determine that you are receiving the best services and the best rate for these services. So now that we have that out of the way, let's welcome Clint to the show. Clint, thanks so much for being on the show today. Since this is your first visit to the podcast, tell us a little bit about yourself and Ownership Mortgage.
Yeah, Mike, thanks so much for having me. It's a pleasure being here. Glad we could jump on this and get this going. So my name's, as you mentioned, Clint Davis. Been with Ownership Mortgage now for a few years. I've been in the mortgage business for a little over 17 years now. Seen a lot of ups and downs, of course. Got in it before the old big '08 crash and, things of that nature, right? And spent about 5 years as an underwriter as well. Now I manage our mortgage company here at Ownership Mortgage, oversee all of our loan operations and things of that nature. Some people ask, what's the difference between Ownership Mortgage and someone else, right? Well, and I don't want to go too deep in the detail of it, but basically for us, our agents become partners with us, and so it's a kind of a partnership within the mortgage. So it's really unique. It's really great. But the benefit is it benefits us as well as the agent. So there's a lot of key things there, a lot of things that are kind of, hey, I don't want to expose, but I would love to talk to someone if they're interested. So it's been really great. We've seen a lot of good things here at Ownership Mortgage. So it's been one of my better career moves. I've worked for some, top-notch companies. Was kind of overseer, a regional part in Guaranteed Rate and some other, mortgage companies. But, ownership's unique. And by making it unique, I can offer now something to our agents. So it's really awesome.
Awesome. So do you have any advice for buyers that are thinking about buying in the current environment?
Well, that's kind of a big topic right now, Mike. A lot of people are asking, well, we should wait, right? That's the number one line you hear now from everyone is, well, let's wait, right? And here's a few things I'll say. Number one, I think if you wait, you're waiting for the market to spur back up. And what happens is you lose the benefit of it right now where it's a buyer's market, right? Though the rate's not a buyer's market, the market itself is a buyer's market. We're seeing a lot more people that are willing to negotiate on the contract, come down the price, get seller concessions, help pay for title policy. So all of those things are benefits. And you're seeing it go at, contract price, this is what we offer, even less. Whereas, Mike, you and I both know this, last year, that same home, and I gave this a scenario not too long ago, actually, there in Hickory, that if you had two homes, all right, and I took it back, and I went today's day, and then I took it back a year. If you had two homes, and let's say both of them were worth $200,000, it's same address, but this year you can get that home for $200,000, and you might get a 6.25 rate. And I asked everybody, what do you think? And everybody, no, I don't want that. Because I said, they're so rate fixed. I said, now let's take the same home and let's back it up a year. That same home you could get for $240,000, but yet you get your 3% rate. Well, what do you want? Well, I don't want to pay over. That's right. And it's almost like you can't offset it, right? Is that 3% difference in the rate really worth offsetting the $30,000, $40,000 on the home, right? At what point do you make that up? If you're going to live in it for the rest of your life, yeah, you're going to make it up. But, statistics show that you're 5 to 7 years in a home and, you're already looking again. And we all know that what we're experiencing right now is a temporary thing in the rate. So we know it's going to come down. So why not go ahead and benefit from it being low? I mean, the market being, a buyer's market, and go ahead and purchase and though the rates are, they're up there, but yet you benefit because now you get the home truly for what it's, what it is. There's nothing like going into negative equity. You and I both know that. Rather be, they always say you drive a vehicle off the market, off the lot, and all of a sudden you've lost $2,000 or $3,000, $4,000 or $5,000, and now you're carrying over negative equity. You don't want that in a home, and that's what we got into. I think was a lot of negative equity. People were, paying well over. So now I think it's a buyer's market. I think the rates are, you know, everybody gets so fixed on that rate, but yet we don't fix the true benefit, and that is it's a buyer's market on the home.
Yeah, it's definitely. I would say buyers definitely have a lot more flexibility. I think in our market, there's still a pretty. There's a supply imbalance where there's still not enough supply for the current buyers that we have out there. But we have kind of noticed that activity's kind of slowed down because of because of the rates. And I'm not going to hold you to this, or I know you don't have a crystal ball, but like, what do you see the rates doing going forward this year? I mean, I know you're not like you've been in the business long enough to kind of see the ups and downs and stuff, but it's and I know you're not like plugged into the Fed, but kind of what are your thoughts on the kind of what we're looking at for the remainder of this year?
Yeah, and that's a great question. Like I get that asked a lot as well. Everybody said, "What are we going to do? When's it going to settle? Where's it going to land?" Right? And I've been doing it for a long time. I really thought going into March we would start to see a little more of a decline than what we really are right now. We had a decline a few weeks ago. The Feds came out. Everybody's always like, "What are the inflation? Right? What's the inflation? Inflation? Or is it calming down? Is it not calming down?" And that's what everything. So here in the mortgage company, everything's off the 10-year Treasury, and so it's really we don't really know. So it's kind of thrown me off, really, to be honest with you, here in the last few weeks, what's happening with the rates, because we started seeing a little trend going down. All of a sudden, we're going back up. So hopefully by April, by March, maybe mid-March, maybe April, we start to see that decline. Now, a few weeks ago, maybe about a month ago, I was actually in Detroit, and I sat with two top individuals at a table, and we talked about rates. One of them used to be kind of the head person at Fannie Mae. And the question I asked was, when do we find normalcy, right? When does normalcy land? And what he said, and what a lot of other individuals that I've been talking to that have been in it for a very long time and see it, they're all saying they feel like by the end of third quarter, we're back to normalcy. Now, what does that mean? Well, if it's the end of third quarter where we find the normalcy, that means in second quarter and even in the third quarter, we should start seeing a little decline, where the rates are going to fall, I think, a little bit. So I think we're going into a great spring and a great summer for the rates, which is why I go back to the last question you asked, Mike. Why not buy now? And why not wait for the rates? Well, if the rates are going to start going down, we all know it triggers the mind. Well, let me go buy a home. Oh, I want that home. I'll put extra money on it. So it's a catch-22 right now, without a doubt. What is the perfect answer? I don't know. I wished I knew, because I would be rich, but I don't know, right?
No, that
So
makes two of us.
I get at some point this plane has to land.
Yeah,
we know that, right? It's just how long is it going to hang out there before it actually does land? I really thought we were starting to decline. I thought we were starting to come down and preparing to land it, but it's just not there yet. So I don't have the perfect answer, but I really believe by the end of third quarter, what everyone's saying,
yeah,
I think we'll find some normalcy.
we should kind of level out at some point, at least.
Yeah.
At least know where we're going. The uncertainty of it, I think, is what's I guess the most disconcerting to people is just just kind of like if even in our business, at least, even a year or so, or maybe a year and a half ago, it seemed like, all right, well, this seems like we're on this plane of like, all right, well, interest rates may go up a little bit, but you kind of felt some certainty there. And then they just went up so much in May. And I think it kind of caught everybody a little bit off guard from May through August, and it just kind of went crazy. So like I said, I think if we can settle down somewhere in the the high fives or sixes, I don't feel like we're going to get back to the threes or anything like that for a long time. But like I said, if we can get in the high fives, at least, I feel like that'll allow business to kind of cycle itself out and actually kind of get back to like you said, kind of maybe like a normal pace.
And I agree, Mike, because you go pre-COVID, we were hanging around in those 5 range and everyone was happy.
Yeah.
Right. And then all of a sudden we started ingraining into the minds of people that 2%, 3%, and it's like, well, I want that rate. Well, that rate is so far gone. We will never,
Yeah.
it's history now, right?
We
And so
probably
is
don't want to.
COVID.
We probably don't want to be in the situation where we have to go there again.
And that's true, right? I mean, no,
I mean,
that's why I'm like, I just want to find normalcy,
yeah,
and then let's go to work.
yeah. No, I
That's what we're
agree.
looking for.
So I read somewhere that FHA is dropping the mortgage insurance premium. What can you tell us about that? I think that's something new coming up and might give buyers a little bit more flexibility with, the type of loan they get or with purchase power.
Yes. So you're right, Mike. Yesterday, the feds came out and said, hey, the Federal Housing Administration came out and said, hey, we're going to lower the MIP, which is the monthly MIP that's attached to that loan for the duration. Unless you put down 10% or more, it'd fall off after 11 years. But if you don't, that's on there for the duration of the loan. For forever, it's always been 85 bips of that loan, basis points. So in essence, meaning that I probably could do some calculations in my head, but basically, whereas if you had $100,000 loan, right, you were paying, $85 a month in mortgage insurance. Okay. Well, now that's going to 55 basis points. So it's dropping 30 basis points. Okay. That's huge because when you start getting up to higher loan amounts, 300, 400,000 under that FHA cap, and they've even raised higher now you can almost compete, because if you're right around that high 600, low 700, now what's going to happen is loan officers are going to start shopping both ways because FHA rates are always cheaper than conventional for the most part because it's so backed by that government backing. So now it's becoming more intriguing. There's just a lot of benefits to it that's opened it up by lowering that MIP on that loan. Now, not only that, it helps the qualifications purpose too, right? So, I mean, you start cutting down $100, $200 a month off a payment, off now you're qualified for more, right? Or you just don't have that monthly payment on there anymore. So that's the great thing about it. I think they're trying to, I've heard a lot of different theories behind it, right? And I'm not here to be to tell them, hey, well, this is what everybody's saying, but at the end of the day, I think they came out and made a great move to become more competitive in the market of, hey, let's try to get more loans. So it is a big thing. It's actually coming out. It'll start on March 20th. That's what
So
we're being told. So
what
March
about people
20th.
that have contracts? And so like you have to start your contract on the 20th, or is it like if you let's say somebody got under contract today, is it?
It's when you lock the loan.
Okay.
And so whenever you lock into that rate on March the 20th, when it goes into effect.
Okay. Gotcha.
And that's when you order that FHA, case number as well. There's a lot of things that go into it, but when you lock into that loan is what we're doing. Now, I don't have all the details, so
sure.
Somebody may go, well, he's wrong, because in there again, it's kind of fresh right now. It just came out, but it was more to say, hey, look, they're dropping at 30 basis points. That's huge. Now let's start shopping conventional and FHA.
No, that's great. So what kind of advice do you have for, let's say someone is thinking about, finally dipping their toe into buying a house? What do you say to first time buyers? What kind of things do they need to do to kind of get prepared?
This is the one question I've been asking for a long time is this, because I always ask, well, how much of a home you're looking for? Well, we don't know yet. Okay. So now all of a sudden I'm going to say, let me just lay the foundation for you. How much can you afford a month? How much money do you want to pay a month on your house and to be able to enjoy it? Well, because some people are like, I want to buy $400,000 home. I said, oh, great. So you're okay with $3,000 payment, just throwing something out. They're like, whoa, no way. I'm like, all right, so let's find that line that you want. And then from there we build. So for first time home buyers, always, what is the monthly payment you do not want to exceed? And then I'll build off that because that is the key for it. Now, of course you want to make sure your credit, kind of watch your credit, see what your credit's doing, make sure what's your income look like? Are you W-2 employed? You got 2 years work history? Are you self-employed? You have 2 years tax returns. All of those things are things that for new first time home buyers, they want to know, to get qualified. And the big one is just, I would say credit and income are the two biggest things when it comes to pre-qualifying someone. Getting that, finding that, and keeping that is crucial in the home buying business, right? But if you're a first-time home buyer and if you're listening to this podcast, I would tell you this: go out and get you a pre-approval. Find what you need and get that, because that will really lay the foundation. So when you can find an agent or whatever you're looking for, at least you know where you're at. And I think that's the key to it all.
No, I agree. And I think it's important to, before people start looking at houses or anything like that, really know what you can really afford.
That's right.
Do you have any advice for them as far as like, should they just talk to you first, or should they pay some stuff off? Or, like there's some people like, oh, I need to take care of a couple things first before I want anybody pull my credit or anything like that. What are your thoughts on, having them do that first versus just coming to talk to you first? And before you even answer, my advice is always, you know what, regardless of your current situation, talk to the lender first, because they may have other advice for you. You may not, paying that one thing off might not be the right thing to do. So I don't want to speak for you, but
no, you're right, Mike. You're right. I mean, at the end of the day, talk to someone that's been doing it for a long time and get their advice. I mean, that's our job, right? And it's just like that individual that's coming to us, that's employed at whatever they do. I would go to them and ask them first before I went and did something, whatever that profession is. I think the same goes for us: is trust a lender that would guide you in the correct way. All right. Now, and I'm not speaking about any individual lender, but some lenders will take you to the max. Well, this is what you can afford. Go get it, right? That's not what you want. You want somebody that's going to make sure that you're looking out for the best interest for you, your children, all of that you put in perspective. So get with someone that knows what they're doing. Let them help lay you a foundation, and sometimes you get homework. I always tell people, hey, I'm going to give you homework. All right, here's your homework. I need you to pay off this, this, and this. And then I need you to call them and ask them when they're going to report, or I do. That's, there's so many things you can do. But at the end of the day, you give homework to some buyers, right? And you follow up on that, just like any teacher would follow up on a kid's homework. So to answer the question, the answer is yes. You get with a lender and let a lender help lay that out for you.
No, I think it's super important to do that. And, everybody that I've ever, worked with and they went through and did that, we generally have always had a really smooth transaction. And the people that, don't get themselves set up that way, that's sometimes when it can be a bumpy road. But
that's right.
Definitely think that's the way to go. And even like, I think some people's hesitancy sometimes is like, oh, I don't want them to pull my credit because I'm worried about, too many dings on my credit or whatever. But like, I always say like, they may not pull your credit right away. Like just because they're going to talk to you doesn't mean they're going to pull it right away. Or if they do, if you're in the process of, trying to get a mortgage, I think, it seems like there's some leniency there. So like, is there anything you can say to like, kind of like alleviate people's fears of having their credit ding too much if they come talk to you?
Right. And I know that's a big fear for everyone, right? It's just, I don't want my credit to be hit. And here's one thing I say: at some point, it's got to be pulled, right? So now you come to people. Some people come to me and say, "Hey, I know I've got 780 credit or high credit." Well, okay, well then I would ask them, "What do you want me to know?" You ask me so that I know, and then I can help answer it. Because sometimes maybe I don't have to pull your credit. Maybe you just want to shop rates. Because if you kind of have an idea what your credit score is, then that's all I need to shop rates for you. If you're just shopping rates, I don't need to pull your credit. Now, keep in mind this, and a lot of people don't understand this, or truly know this, I guess to say, but if you're out shopping for a home, okay, and you try one lender and well, I'm gonna give you, I want to try this, let me pull your credit, and well, that's all these dings. The bureaus understand you're out home shopping, so they're going to give you about a 2-week period there to pull your credit, and you don't get all them hard hits constantly that are dragging your credit score down, because the bureaus know that you're out shopping, right? Same with the car, right? Then you have 4, 5, 6, 7, 8 people pulling your credit, but the bureaus understand it's a one-time hit because they see that you're shopping for a car. Same goes for a home loan, so just kind of keep that in mind as well on that.
Okay. No, that's good advice, because I feel like I think that kind of sometimes you get, even when they are shopping, that if they've already talked to one person, they're worried if they they do shop the rates with somebody else, that they're going to get dinged again. It's going to hurt them. So
Right.
I think that's really good advice. Is there anything that we didn't get to cover that you want to make sure you get out there?
Mike, I can't think of anything right now. I think we covered a lot. I think the big question, everyone, what's the rates, right? When are they going to come down? So I don't have the perfect answer, but I would tell you right now, the market is definitely a buyer's market. So don't get so fixed on the rates when you can benefit that in a house. And I think that's the key.
That's good. Good advice. Well, I appreciate you being on the show.
Yes, Mike. Thanks for having me.
Yeah, I will link your contact information in the show notes. And we do have you linked on our website as well. But we'll make sure if anybody wants to get in touch with you to get pre-qualified, I'll have them reach out to you. And I think there's even apply, and if they go to your website, there's an apply button there.
Yes.
They can just kind of jump right on that. So, but yeah, I really, really appreciate you being on here today and answering these great questions. And look forward to talking to you again in the future.
Thanks, Mike. I appreciate it.
Thanks, Clint.
Bye-bye.
All right. Bye.